Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. It is 50-50 on 50 as investors count down to tomorrow's Fed decision. Uncertainty over the size of the rate cut is at its highest for 17 years. Intel jumps in late trade after the embattled chipmaker announces a multi-billion-dollar deal to make custom AI chips for Amazon, while postponing new factories in Germany and Poland. Plus, Iraq's prime minister tells us US troops are not needed in his country anymore. We bring you our exclusive conversation with Mohammed Shia al-Sudani. So it's a mixed picture across the equity markets in the US and Europe. Yesterday, the S&P 500 ended modestly in positive territory. NASDAQ 100 ended lower. European stocks were also a little softer on the downside yesterday. Today, though, the futures are set for some modest gains in terms of European stocks, up 0.4%. Here in the UK, the FTSE 100 looking to add around 0.6%. There's some moves higher in terms of copper and iron ore prices, and that could be leading to the gains that are expected across the FTSE 100. S&P futures currently flat. There will be many investors out there sitting on the sidelines, of course, ahead of that crucial Fed decision. The answer, of course, tomorrow on whether they go 25 or 50. NASDAQ 100 futures right now also flat. Let's flip the board and look cross-asset. The focus, again, of course, within the currency space. The Bloomberg Dollar Index still at lows last seen in about January of this year. The 2-year, meanwhile, the most rate-sensitive or sensitive part of the rate curve, of course, in terms of Fed decisions, currently at 355. Euro-dollar at 111. We get the ZEW survey later. We've been hearing from Kazakhs, the member of the ECB, a governing council member at Latvia, saying that there will be further cuts and looking at 2.5% for the ECB by next year. Currently at 3.5% in terms of those deposit rates from the ECB. Brent, $73 a barrel, currently up 0.4% on oil. And gold, $2,576, down 0.2%. Goldman Sachs saying gold could take a bit of a leg lower if you only get a 25 basis point cut from the Fed, but they still maintain their target longer term, early part of next year, still looking at 2,700 for gold per troy ounce. Let's check in right now on the moves around Intel, because it's not often that we've been able to flag some good news around this chip maker. But yes, the headlines crossing in the last few hours about a partnership with Intel, between Intel and Amazon AWS, to make a custom-made AI chip. And pre-market, Intel is getting a bit of a bump. We will continue to give the details on that story. The consequences, of course, for the future of Intel, given that that stock is down, what, about 50% year to date. It has been challenged. Let's cross over right now to Singapore. Avril Hong standing by for a check on the markets in Asia. Avril.
Yeah, Tom, it's really about the Fed and its first rate cut this cycle, and how the market seems to be leaning more heavily towards a 50 basis point moves. That seems to be a bit of a tailwind for equities. The Hang Seng, the Australian benchmark, seeing a bit of green, but the pain today is really coming through for Japanese equities that have come back from a long weekend and succumbing to what we saw on the yen just a day ago as it rallied to 139.6 against the greenback. The yen has given up most of those gains, but to some of our M-Life strategists, the declines of as much as 2% on the Nikkei and the Topix earlier today, hit by the export-related names and your chip stocks, just reflects how skittish investors are to what we're going to get from the Federal Reserve if we get a supersized cut, how that could turbocharge the Japanese currency. Worth highlighting that today, helping to cap the declines on the Japanese benchmarks are the demand-oriented domestic names in Japan. Now, flip the board. I also wanted to highlight what we're seeing in terms of the topics and how it has been really sensitive to moves in the Japanese currency. If you take a look at the 30-day moving beta, that has actually climbed since August when that rout was. So it gives you a sense of how investors might have to continue adjusting to this new reality. Flip the board again and take a look at the 1-week implied volatility on the options markets for dollar yen. That has also climbed to the highest level since August. Again, that was when the market rout. If you strip that out, this is the highest for this year. So something to keep in mind with a lot at stake out of the BOJ and the Fed this week, Tom.
Yep, sensitivity to the yen, of course, around that Fed decision. Avril Hong in Singapore with the read across, of course, across Japanese equities under pressure today. Avril, thank you. Now, as Wall Street goes and gears up, of course, for this week's Federal Reserve decision, traders are roughly split, as we've been saying, on how big the Fed's rate cut might be. Let's bring in Bloomberg M-Line strategist Mary Nicola for how the market is adjusting around this decision. Mary, the change has been quite substantial from the middle of last week up until now. Talk to us about the latest pricing and expectations ahead of this key decision by the Fed tomorrow.
Yeah, it looks like traders are clearly conflicted as to what the Fed decision could bring tomorrow and whether we get a 25 basis point cut or a 50 basis point cut. But it's not only that. It's also about what is the reaction from assets as a result of a 25 basis point or a 50 basis point. And in that sense, the Fed seems to be facing a little bit of a double-edged sword because 25 basis point might raise concerns that the Fed is behind the curve. And then if you have a 50 basis point cut, you're going to have to, they're going to be concerned that there's maybe something even bigger of a problem when it comes to growth. So what it does tell us is that irrespective of what the Fed rate cut is, whether it's 25 or 50, the focus really has to be on the Fed messaging and how it allays concerns about whether or not that growth is an issue and how they see growth unfolding and, of course, where they see their path. So a little bit more clearer on the forward guidance would be something that traders would absolutely welcome. And, of course, stocks would also welcome.
OK, so we look for the guidance as well, arguably equally important, or at least certainly has that importance in terms of how to expect or at least how to position around future cuts from this Federal Reserve and how to think about whatever comes through, 25 or 50, as you say. In terms of the particular asset baskets, Mary, I know you've been scrutinising the impact on the yen. We've just been talking to Avril about that. And you're seeing it reflected again in Japanese equities today. Equities down, yen a little softer in the session, but has been, of course, higher. Talk to us about the FX space and the sensitivity there. Is it all about the yen in terms of the read across on potentially softer dollar?
Yeah, it looks like especially for the dollar, I think, especially with what we're seeing from the Fed and what comes out from the Fed, it will be especially critical for FX. We've seen the dollar come a really long way, and it has dropped considerably over the last few weeks. And so I think that's where the vulnerability comes in, where the FX moves lie. So if, let's say, you get a pushback from the Fed in terms of only a 25 basis point cut, you could actually get a little bit of a rally in the dollar. Same, even if you get retail sales that are a bit stronger tonight, you can also see the fact that the dollar rallies as well. So it's really more about the dollar and about the yen. But even if nothing happens with the Fed, the focus still remains on the yen because we do have the BOJ coming this week. And of course, it's not going to be, they're not expected to do anything, but how they message in terms of their more hawkish approach. They've been consistently moving towards that hawkish bias. They've been talking, whether it's Ueda or other peers within the BOJ, they've also been mentioning how they want to adjust rates, especially if the policy, if the outlook continues. So if it's not from the Fed, it's going to be the BOJ, and that BOJ hawkish tone is going to give a boost to the yen.
OK, 140.79 right now on the yen, just a little softer by 0.1%. And as you say, we're going to look ahead to that BOJ meeting as well after the Fed, whether or not Ueda signals another hike in October. Mary Nicola with the analysis, of course, as we lead up to that crucial Fed decision tomorrow. Mary, thank you very much indeed. Now, Iraq's Prime Minister has told us US troops are no longer needed in his country because they have largely succeeded in vanquishing ISIS. Joining me now is Bloomberg Horizon's Middle East and Africa anchor, Jumani Pasechi.
So we flew to Baghdad over the weekend for this exclusive conversation with His Excellency. A half-hour conversation, Tom, spanning topics from regional politics, his view on the ongoing war in Gaza, of course, their very close relationship with Iran historically and increasingly so in the last few years, as well as their desire to see a full withdrawal of U.S. troops from the country. Many of them have been stationed there, of course, since 2014 with the stated aim of defeating ISIS. So a lot of our conversation was centered around that. But then we also spoke about the importance of the hydrocarbon sector. Iraq's economy is still 90% dependent on oil. And as we know, they are the second largest producer within OPEC. And as we've been speaking about many times over the last couple of months, one of the issues with respect to OPEC has been, since the introduction of these voluntary cuts, Iraq has been overproducing versus their quota. One of the questions I asked His Excellency is why?
Iraq is an important country in OPEC and OPEC Plus, and we coordinate with our brothers, especially our brothers in the Kingdom of Saudi Arabia. We are committed to voluntary cuts, and there were issues that the brothers understood in terms of the slight increase in production, and Iraq committed to compensating for that, and we began in August of this year. We are committed to the decisions of OPEC and OPEC Plus in a way that protects the price of oil and this balance between the interest of the producers and consumers.
You say that you will start introducing compensations. Where is that going to come from?
We started reducing the domestic production and reducing the exports in a clear way in the oil market.
Can you talk to me about the future of the pipeline from Kurdistan? It's been shut off for several months now. You've talked about the possibility of the resumption of gas going through that pipeline. Can you give us a timeline on it? And also, again, what that would do to your overall production, given what we were just talking about vis-a-vis the OPEC quotas?
Let's understand the problem with the Iraqi-Turkish oil pipeline. The export stopped from Ceyhan after the decision from the International Court in Paris over a lawsuit filed by the former Iraqi governments over exporting oil without SOMO's approval. And then we faced another problem, and that's a legal issue. And they were decisions by the federal court regarding oil contracts in Kurdistan region and the budget law that fixed the average cost of producing a barrel that doesn't surpass $8 for every barrel. Whereas fixed production cost in the oil contracts of oil companies with Kurdistan region is over $26. We are now in front of two options only. We either amend the contracts, which is what the companies dealing with the Kurdistan region had rejected, or we amend the budget law, and this requires political agreement. Iraq is keen to resolve this problem. We are missing the production capacity from this strategic, important line, and we are keen on investing in existing oil and the work of the companies. There are ongoing talks with the companies and with brothers in the Kurdistan region, and we hope to reach a solution based on the legal paths that I mentioned.
Could it happen this year?
Possible.
So, Tom, as I was telling you earlier, Iraq is OPEC's second largest oil producer, and they do play a big role in determining the overall barrels that are put back to the market. These voluntary cuts have not been adhered to. He does tell me that they plan on introducing these compensation cuts with not a lot of detail. And, of course, the other swing factor to think about from the perspective of Iraq and its total potential for production is this Kurdistan pipeline that has been shut now since spring of 2023, ongoing disputes and contracts between Kurdistan, the companies in the north, and some of the other contracts of the south. They look as though they're looking to get to a resolution of some form with respect to those disputes. And that would mean potentially an even more production from Iraq coming to the market to the tune of about 500,000 barrels a day. Why is this important? Because if you think macro here, we talk about the potential downside risk to oil. Some of it, of course, is on back of the weaker demand outlook, as we've talked about extensively on the show, particularly some of those signals coming through from China. But then also you have to think about the supply that's coming through. OPEC has been trying to manage the amount of supply that it's putting to the market, but Iraq has been overproducing versus those quotas, about 200,000 more than what the quota dictates, with the potential to bring more barrels to market as well. So something to bear in mind.
Okay, Jumana Basechi in Dubai with that exclusive interview with the Prime Minister of Iraq. Jumana, thank you very much indeed. Here's what else we're thinking about today then. We are going to be getting some details around new EU commissioners being announced as the palace intrigue in Brussels continues and France lobbies for a more powerful position. At 10 a.m. UK time, a touch on the health of the German economy with the ZEW survey expectations. We will break that live for you. And at 1:30 p.m. UK time, it is US retail sales. Really consequential. They could, in fact, give you some detail around whether or not the Fed goes 25 or 50, or feed into that debate at least as Fed officials meet today and make that decision tomorrow. Those are the retail sales, 1:30 p.m. UK time. Coming up, more emerges about the suspect in the apparent assassination attempt on Donald Trump. We're going to have the details of the FBI's investigation next. Plus, we will discuss AI tech regulation in the EU. We're going to speak to Kirsten Rulf from Boston Consulting Group. That's at 6:30 a.m. UK time. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, more details are emerging about the suspect in the apparent assassination attempt on former President Donald Trump. The FBI says Ryan Ralph may have been in the area near Trump's golf course in Florida for about 12 hours before he was spotted. Let's get more details from Bloomberg senior editor Bill Ferries. Bill, what have the FBI been saying then in terms of this suspect? What are the details that have come through in the last 12 hours or so?
Well, yeah, Tom, like you said, the 58-year-old suspect, Ryan Ralph, may have been, according to his cellular phone data, spending about 12 hours in the area where he was with his rifle and backpack waiting for the president, a former president, to show up. This is all according to the FBI and police investigation. They also found that the vehicle he was captured in about an hour after Secret Service engaged him had license plates that were stolen from another vehicle. So a lot of details still emerging. He's initially been charged with 2 counts, one being a felon illegally having a weapon, and the other being having a weapon that had its serial number defaced or scratched out. I suspect we'll get a lot more details on additional charges over the next week or two, but the FBI still now looking very deeply into his social media presence to see if there's anything more they can learn about his motivations.
Bill, to what extent has this episode readjusted or at least led to changes in terms of the Trump campaign?
Well, it's definitely allowed the Trump campaign to kind of turn the page on a discussion that had focused quite a bit on the former president's relatively poor performance in the debate against Kamala Harris exactly a week ago. Republicans are focused, or Trump has focused more on saying that the Democratic rhetoric has led to this second assassination attempt on him. He's tried to push back and say that he's going to keep fighting, that he is committed to winning the election. But basically, I think we're not going to hear quite as much talk about things like whether immigrants are eating people's pets. That, along with the debate, had been the big focus just 48 hours ago. I think Republicans are going to try to switch this to more discussion about the economy and other things where the former president is typically on a little bit stronger footing.
OK, Bill Ferries in Singapore on the update, of course, around the suspect and how the Trump campaign is adjusting to this event. Bill, thank you for the context as ever. There's plenty more coming up. Stay with us. This is Bloomberg.
We do need to raise money to get resources for this so that the poor countries, get out of the poverty trap and then are self-sufficient. The innovation is going to accelerate. Tools like AI are helping us understand the gut, the immune system, how to design vaccines in a very deep way. And the key thing that the foundation has with innovation is making sure it's not just helping the rich countries, but it's helping the poorest. And so, can they get medical advice in their native language on their cell phone? Can they have the diseases that are so ignored, like malaria? Can we use AI to develop ways to not only reduce that, but eventually eradicate it? And so, that's where the foundation is, looking at the innovation and making sure that it's benefiting those most in need.
The foundation talking with global leaders often, I'm sure, global leaders of wealthy developed nations who are preoccupied right now with their own political instabilities, their own worries about the cost of living. Will you get the help you need from developed nations, do you think?
No, that's a very good question. The dream is that even in the face of huge budgetary challenges that all countries have, that they would be willing to have 1% to 2% that go to help the poorest, to help these countries move forward. And these are things where you're saving a life for less than $1,000 per life saved. So, very catalytic, very well measured. I wouldn't be putting my money in unless I knew that it was extremely well spent. And so we're trying to keep this on the agenda to continue that miracle that took place, where we made so much progress getting rid of childhood death.
That was, of course, Microsoft co-founder and philanthropist Bill Gates speaking to Bloomberg's Caroline Hyde. Now, to some other stories making the news this Tuesday. Microsoft, meanwhile, has unveiled a new $60 billion stock buyback program, matching its largest ever repurchase. Shareholders will also receive a quarterly dividend of 83 cents a share from November. That's up from the current 75 cents. The share repurchase agreement replaces the buyback program announced in 2021. Boeing is freezing hiring to preserve cash as the plane maker prepares for a drawn-out workers' strike. The firm has also implemented cost-cutting measures, including temporary furloughs and trimming supplier spending. Workers have rejected a proposal that would have boosted wages by 25% over 4 years. Amazon CEO Andy Jassy is moving to streamline the world's largest online retailer and cloud computing company. The firm is cutting management layers and ordering employees to return to the office 5 days a week, beginning in January. Jassy announced the shake-up in a memo to employees yesterday, saying Amazon wants to, quote, operate like the world's largest startup. Coming up, searching the internal market. After the departure of EU Commissioner Thierry Breton, Brussels has a job vacancy. We will get reaction to that. We'll also discuss what Europe and the UK, frankly, needs to do to close the innovation gap when it comes to generative AI, and what corporations and companies need to do to embed some of that hardware and software into their systems to create the efficiencies and the productivity needed, of course, to evolve around this revolution in technology. Currently, across your markets, European futures pointing to gains of 0.4%. S&P E-minis are flat. Nasdaq futures pointing to gains of 0.1%. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. It is 50-50 on 50 as investors count down to tomorrow's Fed decision. Uncertainty over the size of the rate cut is at its highest for 17 years. Intel jumps in late trade after the embattled chipmaker announces a multi-billion-dollar deal to make custom AI chips for Amazon, while postponing new factories in both Germany and Poland. And Iraq's Prime Minister tells us US troops are not needed in his country anymore. We bring you our exclusive conversation with Mohammed Shia al-Sudani. Let's check these markets then, and European futures pushing towards a positive start to the session after some modest losses across European stocks yesterday. It was a mixed picture by the end of the close on Wall Street as well, with the Nasdaq 100 down, but the S&P grinding out some very modest gains. There will be many investors, of course, with cash on the sidelines, or at least holding off for investment decisions until they get clarity from the Federal Reserve, with that decision, of course, coming through tomorrow. European futures then pointing high by 0.4%. Here in the UK, the FTSE 100 looking to add 44 points. We're seeing a bit of upside in terms of iron ore and oil, and that could play into a more positive session for the UK, up 0.5%. S&P futures flat, Nasdaq futures looking to modest gains of about 0.1% after the downside yesterday. Let's flip the board and look cross-asset, scrutinising, of course, the more rate-sensitive part of the Treasury curve with the 2-year in focus, currently at 3.55. Euro dollar at 1.11. We have retail sales out of the US later today. Before that, the ZEW survey on Germany as well. So 2 surveys and a data print, which could be consequential in terms of building out your understanding of the European economy, of course, looking ahead to that US Fed decision. Brent trading at $73 a barrel, up 0.5%. Gold, 2,576. Goldman Sachs saying gold could move a little lower if they only go with a 25 basis point cut from the Fed, but ultimately will still get to that 2,700 level that Goldman's targeting in the first half of 2025 on the yellow metal. Now, Emmanuel Macron is in talks with the European Commission to carve out a new, more powerful position for France. Bloomberg understands the French president wants his nominee to oversee the bloc's efforts to boost its competitiveness. The shake-up comes after the outspoken EU Commissioner, Thierry Breton, resigned from his post, criticising Commission President Ursula von der Leyen. Let's get more on the story. And the palace intrigue in Brussels with Bloomberg's Oliver Crook, who's been following all of this through a microscope. What do we know in terms of where things stand on, what, can we call it Breton Gate at this point, Ollie?
I think that's fair, Tom. I mean, outspoken kind of understates what we got from Thierry Breton yesterday in his sort of spectacular resignation and just sort of airing the dirty laundry of Brussels on the front lawn there of the EU Commission. But basically what we had is a very swiftly from France, a replacement name. And this was really the big holdup that has been holding back what Ursula von der Leyen has been wanting to do, which is to put out the names of who is going to run the Commission. So what we got from Macron now is we got the ex-foreign minister of France is going to be put forward as France's candidate, Séjourné, who is 39 years old, a sort of Macronian way of, putting someone much younger into these roles. And he will be, we understand, potentially made one of the only 3 executive vice presidents within the EU Commission, and the one that would be sort of the Draghi commissioner, if you will, basically dealing with European prosperity and competitiveness, which is obviously a very large job. Now that we have all of the names, we hope to hear today from Ursula von der Leyen of who she wants to arrange in what commission, but also, Tom, critically, what the structure of those commissions will be, because obviously there has been a very long time since the last commission. There is now a war that is going on in Ukraine. There was discussion about potentially getting, for example, a defense commissioner. And if there is now going to be a sort of competitiveness commissioner, what will that look like? And critically, Tom, the question I think with that is because it's such a big job and you need to deal with so many issues, what will the levers of power be for that sort of role? That's the kind of thing that we're going to get today from the European Commission, we hope, from Ursula von der Leyen.
OK, we watch that, of course, as it unfolds. What are the other top jobs to be scrutinising then, Ollie, at this point?
Yeah, so as we mentioned, there's 3 executive vice president roles in the current commission, right? The first is the competitiveness, or I should say the competition commissioner, which is Margarita Vestager. This is probably one of the most, if not the most powerful institution within the EU because she can act unilaterally. We saw last week the kinds of things she can do, that 14 billion euro tax decree to Apple, to Ireland, the kind of 2 billion here and there from Google. This is one of the key roles. Of course, trade is another one. The tech policy is going to be another one. And of course, there's a question of the Green Deal and also how prominent is that going to be. So those are going to be all the names we watch for. For her, for Ursula von der Leyen, she also needs to balance the different political parties. There are the 3 that are sort of ruling. She also needs to think about the different countries, their influence, their economic size, their population. But of course, Tom, the one thing she wanted to do also was get a full gender balance within this commission. And that seems very unlikely to happen, just given that she just doesn't have the candidates she needs from all the countries.
Yeah, she wanted that 50-50 mix, didn't she? Oliver Crook on the ground for us in Berlin following this story for us. We'll have more details and, of course, an update expected later today. Ollie, thank you for the latest on that front. Let's talk and remain focused on EU competitiveness, particularly with the tech angle, and bring in at this point Kirsten Rulf, Partner and Associate Director at the Boston Consulting Group, formerly a senior digital policy advisor to both German Chancellors Angela Merkel and Olaf Scholz, and co-negotiated the EU's AI Act. Kirsten, thank you very much for joining us. So with that deep experience then, your views on whether, and Ollie framed it this way, this is a Draghi commissioner that the French are ultimately pushing for, with a focus on closing the gap around competitiveness. Would this move, would this role, do you think, help Europe, help Brussels close the gap with the US? How consequential could this be?
So, Tom, I think it's not about any one name or any one role. I think what Macron and also Draghi made very clear is that from a business perspective, from a CEO's perspective, this is really Europe's last chance to catch up in the technology race. Macron has been very vocal, as have others, on digital sovereignty, on Europe becoming a competitive force globally, catching up with the US, catching up with China in terms of AI, in terms of cloud, in terms of competitiveness in the digital world. And I think this is not so much about putting one name forward, as in really pushing that concept once more and making CEOs and making businesses aware that this is the last chance for Europe to catch up and that they need to get going on these technologies.
How much of a catch-up is needed? How wide is that gulf, particularly between Europe and the US? And are the prescriptions laid out in the Draghi report appropriate?
I think so far Europe has been very much looking at, is there the one model that we can, the one champion that we can push? But the AI race is not about one champion or one technology. It really is, and I think that's what's clearly outlined in the Draghi report, about looking at the whole value chain. So from a CEO perspective, you need to look at, okay, do I have the foundations for AI? Do I have the cloud? Do I have the connectivity? Do I have the people? 70% of this transformation is about getting the people to move and to change and to really embrace this technology and work with it. And then actually making money from that technology, so bringing the value focus more in. It's not about having this model or that model, it's about creating value and really seeing the effect in the P&L. That is what this is about, and I think that's what the Draghi report lines out.
And there's been additional scrutiny on that very question, hasn't there, in recent weeks and months. What is the AI readiness of corporate Europe, of some of your clients? What are you seeing on the ground in terms of attempts to embed this technology and be match fit for this revolution?
I think that CEOs see more and more that they need to look at this from end to end. So there's basically three things that you need as a company to succeed in this. First, you need a clear governance. It cannot be that in this area of the company there's a couple of use cases and then that area catches up with another use case and maybe they're the same. You need to look at it from end to end and transform functions end to end with the technology. Then the second thing that you really need is you need to have a risk management system. And only just yesterday, a CEO said to me that they're so grateful for the European AI Act because they finally know now what's going on in their company. And they have this coherent view and they can actually scale proofs of concepts and short experiments that they had, because now they have the risk management system to really scale it and bring it customer facing. And the third thing that you really need is you need to bring the talent on board and really work with it, because as I said, 70% is the people that use the tech.
So you had a positive response from one of the CEOs there to EU AI Act. I mean, I talk to people in the tech space and particularly those sitting in the US, and they think that Europe has tied itself in knots around regulation. It will stifle Europe's innovative capabilities. You potentially, it seems, push back on that, given your role in crafting the EU AI Act, presumably. Where are we on the regulatory front and how that evolves?
Yeah, not just pushing back on because I co-wrote the AI Act, but actually pushing back because of the experience I have with companies. I think I've worked with about 400 European companies since I joined BCG, and most of them really come to a certain threshold, and then they need that push also in terms of risk management and in terms of other levers. So not just because I wrote the regulation, because I see it in practice, that is regulation, or rather guidelines and rules for risk management is something that we see. And if we look globally, I think we see other areas catching up, not always making it easier for businesses that the US doesn't have a coherent federal law, but has a lot of state laws, Chinese law also up there. I think it's too early to see who has the best system, far too early, but I think...
Where do you stand? I was talking to someone senior in tech a few weeks ago, and they said, look, this rush to artificial general intelligence, AGI, could happen within the next decade. That's the forecast from some. Are we ready for the impacts on the labour market if we have human-level intelligence? What is the motivation for companies, for your clients, to keep the workforces that they currently have?
I think currently my clients are dealing with way other problems, which is actually creating value from the technology. So this is not a technology that you switch on and then you see the effect immediately in your P&L. This is something that you really need to be creative with, the use cases. And I think we're far from artificial general intelligence being implemented because we're still far from, the generative AI being implemented that we see. I think there's a lot that companies still have to do and learn.
Still a long way off on that front.
Still a long way.
Okay, Kirsten, thank you very much indeed with the deep experience, of course, on AI regulation and governance. Kirsten Rulf, partner and associate director at the Boston Consulting Group, formerly, of course, an advisor to Chancellors Merkel and Scholz. Now, the EU is reported to be planning to raise up to 40 billion euros in new loans for Ukraine by the end of the year, even without US participation. The FT says the move came after a G7 plan to use frozen Russian assets to help Kyiv faltered. Ukraine and the IMF say the country faces a $38 billion financing gap next year. Now we have some updates coming through on UniCredit. Of course, this was the corporate story of the week last week in terms of that percentage holding that UniCredit had built in Commerzbank. And of course, Francine Lacroix spoke to the CEO of UniCredit on that front as well. UniCredit now coming out. These are reports in an Italian newspaper. UniCredit may ask the ECB for authorization in the coming days to raise its stake in Commerzbank to 30%. You'll remember, of course, they have a stake of around 9% right now. They're looking to raise that, at least get authorization from the ECB to raise that stake in Commerzbank to 30%. And certainly, of course, Mr. Orgel did not rule out wanting to take over Commerzbank in that conversation with Francine Lacroix last week. The Italian newspaper Il Messaggero reporting this information. We'll keep across this story for you, of course, and check in on stocks of both companies at the start of trade, 8 a.m. UK time. Coming up, Intel is to make custom AI chips for Amazon, boosting Pat Gelsinger's efforts to turn around the troubled chip maker. We bring you the details next. This is Bloomberg. Welcome back. Intel shares have jumped almost 8%. Don't get to say that every day. Post-market after it said it will make custom AI chips for Amazon while also postponing new factories in Germany and Poland. For more, let's bring in Robert Lee from our Bloomberg intelligence team. Rob, talk to us about the consequences. It's not often we have good news on Intel, but this seems to be a significant move forward. A partnership with Amazon, with AWS. Talk to us about the implications.
No, that's absolutely right. It's a nice piece of good news, a step in the right direction, perhaps. Can I just give a very brief, abbreviated history lesson on Intel? Going back 20 years or more, the predominant business model in the industry was something called IDM, or Integrated Device Manufacture. In other words, companies designed chips, they fabricated the chips, they did the back-end assembly and test, and then shipped them to customers. So what we've seen over the last 20 years or so is a so-called disaggregation of the value chain, with the growth of specialist companies that specialize in one individual section. For example, TSMC doing foundry, NVIDIA focusing on design. The issue that Intel has at the moment is twofold. In trying to carry on with this very traditional cost-heavy model, as I say, it's expensive. If you look at their headcount, Intel's total headcount exceeds the combined headcount of TSMC and NVIDIA. So it's a very expensive model to pursue. The second issue they've got is their growth is still tied to the PC market. The growth in the PC market these days, or the growth outlook, doesn't match what it's performed in or what it's achieved in the past. So there is a growth challenge. So Intel needs to do two things. It needs to rationalize its cost base and develop new growth drivers. So this AWS move, a potential landmark tenant, if you like, in the foundry business, is a potential step in the right direction. But there are still major question marks there, I think.
What does it tell us then about the future of the Intel business?
Well, again, they need to focus. I think potentially we could see a breakup of Intel's business. Again, trying to be all things to all men and women is a very expensive and very cost-heavy business. So going forward, are they going to focus more on the design or on the foundry or the fabrication? So I think there is a realistic risk that we see a spin-off of their foundry business and they solely focus on design. And guess what? What are they most likely to focus on going forward? It's probably in the AI field. So whilst they lost their technology leadership several years ago, they still are one of the world's most competent semiconductor firms. I think if they manage to rationalize the costs within the business and focus more on the AI, then there is potential for them to drive new growth within that market. So the AWS move is a step in the right direction, but there still is a significant amount of uncertainty, and it's all down to execution and down to Pat Gelsinger to deliver on that.
OK, Robert Lee from Bloomberg Intelligence, thank you very much. Now, the embattled French telecoms firm Altice is facing pushback on its plan for investors to take a 20% haircut. With me now with the details is Bloomberg's Irene Garcia Perez. Talk to us then, Irene. Thanks for joining us bright and early around the set. How did Altice get to this point? What's at stake for the pounder, Patrick, of course, Drahi?
So the company has been growing in the past years with debt. It was debt-full acquisitions when it was very cheap to borrow. Now it's gotten to a point where it has a lot of debt with higher interest rates and a business that it's not going totally well, the main business SFR. It's gotten to a point where the company told creditors, look, we need to cut leverage, and to do that, we will need your help. And that means haircuts.
Yeah, OK, potentially 20% haircuts. How difficult is it to align these investors? You've got creditors from the US, creditors from Europe. They all have different stakes in this. Are they getting that alignment?
Well, so far they've agreed to push back on the 20% proposal, but now they're fine-tuning how much would be acceptable, because, of course, you have original lenders that don't want any haircuts, others that would be OK with accepting a small haircut, 10%, and others that bought at a discount, so a 10% haircut would actually be a very big win for them. And then you also have different approaches depending on the maturities, because, for instance, for the ones that have the debt coming due early next year, there's actually an incentive to drag things on and get repaid in full if they don't have a deal before then. And for the others are like, well, no, we actually want a deal, and to spread the pain across creditors instead of taking all the hit ourselves. Yeah, OK, so there's some complexities given all the different positions. What are you watching for next in these negotiations? So it's about what the creditors come up with, and very important, how much of the company has been selling assets. So it does have the money to repay creditors early next year in January and February when it comes due. But it doesn't have the money to repay all creditors along the curve. So it's about how much of the assets that were sold, how much of that money will go into these negotiations. OK. Irene Garcia Perez, thank you very much indeed in terms of the negotiation between Altice and its collection of creditors and how that unfolds. Irene, thank you very much indeed. Let's check in on the markets then. We are building up, of course, to that crucial Fed decision. Markets split essentially as to whether or not they go 25 basis points or for a jumbo 50 that Bill Dudley, formerly, of course, president of the New York Fed, says that they should go for. Currently, European futures up 0.4%. The FTSE 100 looking to a bright day as well, looking to add 47 points. The DAX futures pointing higher by 70 points, up 0.4%. I think we have a cross-asset board. We'll focus, of course, on the front end in terms of the yield curve. The US 2-year right now at 355. Interesting note coming through from Goldman Sachs on the prospects for gold in the days ahead. If they only go with 25 basis points, the Federal Reserve, you could see lower prices around gold. It is still around record highs at 2,579. Gold and Sachs reiterating their view on the yellow metal, hitting 2,700 in the first part of 2025. There's plenty more coming up. Stay with us. This is Bloomberg.
The market has come to the view that 50 basis points at this meeting is, in fact, appropriate. It's pretty important that the Fed head back to neutral expeditiously, and that 25 basis points wasn't fast enough.
That, of course, was the former New York Fed President Bill Dudley backing a 50 basis point cut in rates at the upcoming FOMC meeting. Of course, it kicks off today. The decision is tomorrow. And this is where the market is on tenterhooks. Do they go 25 basis points or a quote-unquote jumbo 50 basis points. In terms of the probabilities right now, and this is based on swaps, it's a percentage based on swaps, currently looking at a 54% chance that they actually go for 50 basis points. This debate has evolved, of course, over the last week and a half or so. Let's flip the board and have a look at how the changes have come in. And some of this has been driven by commentary from the likes of Bill Dudley, of course, formerly the New York president of the Fed there. And he says they should and they probably will go 50 basis points simply because monetary policy right now is in restrictive territory. He says that's unnecessary given the moves lower, of course, and the softness that you're starting to see in the labour market. Interesting as well, the Wall Street Journal reporting today on the split amongst Fed members and citing the former Dallas Fed president Robert Kaplan saying, I would prefer 50. So that's Kaplan and Dudley. JP Morgan saying they should and they will go 50. The debate, though, is live. You've got many others out there saying 25 basis points, given the overall health of the US economy, remains appropriate. Let's flip the board and have a look at another story because, of course, lower rates can build into the argument that tech will get a lift. And that is a view from Goldman Sachs saying you should buy this dip on AI. That's from their trading team. They say lower rates and the fundamentals still support the AI story. They have a basket of AI stocks. The overall basket for Goldman, that includes the likes of Nvidia and Microsoft and others, is down about 11%. They say now is the time to get exposure again to the AI theme. There's plenty more coming up. Stay with us for the opening trade. That is next. This is Bloomberg.